Good morning. So let's start solving illustrations on income from business. So let me do a quick recap of the format because unless you're not familiar with this format, you won't be able to solve the question. So therefore, it is important that you get acquainted, understand the format which is presented here on the slide and make sense of the steps which are mentioned here. So let me do a quick recall that why are we not taking the net profit given in the profit and loss account as the taxable profit and not calculating the tax on that net profit given in the P&L account? The answer is the net profit available in the profit and loss account can't be considered as income from business for a couple of reasons. Reason number one, on account of incompatibility between accounting rules and the provisions of Income Tax Act. Reason number two, assessee may include in the profit and loss account personal incomes, personal expenses, non-business expenses, which unnecessary reduces the profit with an objective of minimizing the tax liability. So that needs to be scrutinized. Reason number three, assessee may also include non-business incomes and other incomes which are not related to business with an objective of inflating the profit or increasing the profit. So income tax department clearly says that you have to present the right picture, neither show lesser profit or show more profits. So identify the right income from business. On that, you compute the tax. So in order to identify the right business income, we have to take the help of this reconciliated statement format, which is there here, which primarily comprises of two steps. Step number one, take the net profit. So where do we find this net profit or loss? The answer is simple. You have to get this in the profit and loss account. Then you have to do two important steps. First, add all those transactions that reduces the net profit, add it back to this step number one, and then deduct all those transactions that decreases the net profit. So the ultimate outcome will be taxable income from business. Now, when we say add transactions that reduces net profit, what are the transactions that reduces net profit? The answer is the first in the list being inadmissible expenses. So you should understand what exactly this inadmissible expenses means. Inadmissible expenses are those expenses which are not related to business or which are not allowed by income tax department. So these 2 points constitutes inadmissible expenses, not allowed by income tax department, not related to business. Where do we find it? The answer is on the debit side of profit and loss account. Second, admissible incomes. These are business incomes. These are incomes which is allowed by income tax department, but the SSC has forgotten, the SSC has not recorded in the profit and loss account. So if it is not recorded in the profit and loss account, where do we find it? The answer is in the adjustments. So where to look for item number B? To look in the adjustments. Okay, so this you should be clear. And as we discussed in the previous class, both overvaluation of opening stock and undervaluation of closing stock increases, decreases, both these decreases net profit, and therefore we are adding it back. Now, what are the items that needs to be deducted? All those transactions that increases the net profit needs to be deducted. So on this list, one of the important items is to identify inadmissible incomes. What are inadmissible incomes? Similar to inadmissible expenses. So these are items which are non-business incomes. Second, it is not allowed by income tax department, and therefore it is inadmissible income. So where do we locate it? On the credit side of profit and loss account. Likewise, where the way we had admissible incomes here, we also have admissible expenses. So what do you mean by admissible expenses? So these are expenses which are related to business, which is allowed by income tax department, but unfortunately it is not recorded in the profit and loss account. So where do we find it? In the adjustment. So two items we find in the adjustments. What are those? Admissible incomes, inadmissible, admissible incomes, and admissible expenses. So admissible incomes and expenses we have to find in the adjustment. On the other hand, inadmissible expenses and inadmissible incomes we should find in profit and loss account. And likewise here, undervaluation of opening stock and overvaluation of closing stock increases the net profit, and therefore it should be deducted from profit and loss account. So if you remember if you look at the pattern here, the first four what you have in step number 2 becomes opposite in step number 3. So remembering also becomes quite easier. So let's do the calculation now. Let's solve the first question. So this is the first question, and I mentioned you that most of the time you'll be given a profit and loss account as a question. So this is our profit and loss account. You're familiar with this. This is a nominal account. So when we say nominal account, debit all expenses and losses, credit all incomes and gains. So that's the rule of nominal account. So let's follow the format. So what should we do as per the format? Step number 1, identify net profit or loss as per profit and loss account. So let's do that. So first let's write down the opening statement. What is the name of the assessee? Mr. Hero. So always opening statement is important. Even in the examination, you should begin every solution with this. So computation of taxable income from business of Mr. Hero for assessment year 2020. For your batch, remember, you're following assessment year 2021. So assessment year so this is the first step. The first step is to write down the net profit as per P&L account. So step number 1. Net profit as per profit and loss account. So as per profit and loss account, as we can see here, the net profit is 90,000. So let's write that down. $90,000. Now, what's the second step? As per the format, second step is to add all those transactions that reduces net profit. So add transactions that reduces net profit. So under this, the first transaction is called inadmissible expenses. What do you mean by this? Not allowed but debited to P&L account. So that's the meaning. So under this, we have to write the sub items now one by one, for which we have to follow the step. So inadmissible expenses are those expenses which are not related to business, and it is also not allowed by income tax department. So let's look at the question and identify the list of all inadmissible expenses. Advertisement expenses. So first is salary to employees. So are salary to employees a business related expense? The answer is yes. It is a business expense. Employees are part of business. Without employees, how can you do business? So this is a business expense, but always also cross check if there is any adjustment. So here adjustment number 6 says salary includes 6,000 paid to a worker at home. That means this is already included in the P&L account under the transaction salaries. So somebody who works at home and does household work is a household, probably a household maid or a servant at house, has no connection with business. He's doing household work. So let's say this associate sole proprietor, Mr. Hero, in order to help his spouse, has uh, appointed a servant to do household work. So that is showing as a business employee, which is not acceptable, which is inadmissible. So here in this 95,000, 6,000 paid to a worker at home is inadmissible expense. So in this 96,000, in this 95,000, 6,000 becomes inadmissible. We are okay with the remaining 89,000, but this 6,000 becomes inadmissible. Okay, so let's write that here in the question. So first one, salaries. So in this salaries, salary paid to a worker at home. How much? 6,000. So this 6,000 becomes inadmissible. Simple. Now let's get back to the question. All you have to do is scrutinize the transactions one by one, and it will just help you out in figuring out the list of inadmissible items, both on the debit and the credit side. Now next, move on to advertisement expenses. Advertisement expenses are indeed related to business. Advertisement is used as a weapon, as a tool to enhance the sales. And sales is, an important component that talks about your growth. And from sales, we derive the profits. So obviously, this is a business related expense. But if you guys could recall one of the points what we had discussed, right, that any expense which is paid by cash, and if the payment receipt exceeds 10,000, then such expense will become inadmissible. So what's wrong with this is that there's nothing wrong in this. This is a business expense. The only issue is that this assessee has paid it by cash. Income tax department says any expenses related to business, if it is up to 10,000, you pay by cash. We don't have any issues. But the moment the expense exceeds 10,000, you should not pay by cash nor by a bearer check. Then how it should be paid? Electronic fund transfer, demand draft, account pay check, but not through cash or bearer check. There's a difference between account pay check and bearer check, which I don't think so. I need to explain it, right? Bearer check is as good as cash. So since this is paid by cash and this has exceeded 10,000, so entire 24,000 becomes an inadmissible expense. So this entire 24,000 becomes inadmissible. The moment the payment receipt exceeds 10,000, 100% of such expense becomes inadmissible. So let's write this down here. Advertisement expense paid by cash exceeding 10,000. So the entire 24,000 becomes inadmissible. Next, go to the other transactions. So we're done with this. General expense 16,000. Now, what do you mean by general expense? So there are many expenses of business. See, profit and loss account, you can't record each and every expense, right? Let's say we are spending on I'm a shopkeeper, and in order to maintain hygiene in my shop, I'm buying sanitizer, I'm buying liquid soap, I'm buying toilet cleaner, I'm buying a broomstick, I'm buying a mop. I can't record this one by one saying that two toilet paper purchased, two toilet cleaner purchased. So generally what happens is all these small expenses, routine expenses are clubbed as one transaction, and in the P&L account, I'll pass it as general expense or sometimes sundry expense. So either I will record this operational routine expenses as general expense or as sundry expense. Okay, so that's how it is done. Now you might be wondering, what do you mean by general or what do you mean by sundry? So basically these are various routine operational expenses which are small transactions which are clubbed and summarized as general expenses. So bottom line, general expenses are business expenses. So should we do anything? The answer is we don't have to do anything for business related expenses. All we have to do is treat non-business or inadmissible expenses. But it is always good to see if there's any adjustment for general expense in the additional information. So let's see here. Now you see there is a one item here which says general expense include 4,000 contribution made towards staff welfare fund. Now, while having discussion, I told you point number 6, any amount spent on employees, most likely it is allowed by and large. But there are certain things which are inadmissible, and I told you have to remember instead of remembering what is inadmissible, what is admissible. Anything which you pay employee for their services is admissible, whether it is salary, perquisites, allowances, retirement benefits like gratuity, pension, provident fund, superannuation fund, facilities what you set up. All these are for the welfare of the employees. But there are certain things which you have to remember well, that these are the items which are inadmissible. So now what are those items which are inadmissible? Unrecognized provident fund. Then you also have staff welfare fund. So these are the two items which are inadmissible expenses. And I also mentioned that staff welfare expense is allowed, but staff welfare fund is not allowed. The reason why staff welfare fund is not allowed is because by and large what happens, this staff welfare fund, the employer collects some amount of contribution for employee and gives it to the employee who is in need, who is in emergency. So there is a possibility that the employer might misuse this fund, and there is no proper monitoring of these funds. So that's the reason income tax department says okay, it is inadmissible. We can't allow this, right? So therefore, staff welfare fund is an inadmissible expense. And how much is this? 4,000. So this 4,000 SSC has included in general expenses. So 4,000 on staff welfare fund becomes inadmissible expense. So let's write here in the solution, item number 3 under inadmissible, staff welfare fund, which is included in general expenses. The amount is 4,000. Okay, let's go back to profit and loss account. Legal expense, 22,000. Now, what are legal expenses? Basically, a business has to have a lawyer. Business need to have a lawyer, an advocate, to take advices on certain legal matters. Sometimes to draft a contract, to draft an agreement, to enter into a sale deed with supplier, right? In order to frame the terms and condition of the bills, you need a lawyer for which you pay him the fees, which is considered as legal expense. So you need a legal expert to help you in the routine transaction in matters of law. Uh, so there's nothing wrong when you pay fees to a lawyer who has helped you, who has given services for your business. It is obviously a business expense, right? So there's nothing wrong in this. This is a business expense, but always see the adjustment. So legal expense, there is an adjustment. Adjustment number 5. Legal expense include 1,000 rupees paid to an advocate, and it clearly says 1,000 rupees was paid in relation to a personal case. So he has spent legal expenses on business as per the profit and loss account worth 22,000, but this also includes a personal counseling or personal advice taken from the lawyer for personal case. So therefore, that personal case advice or counseling costed him a fee of 1,000 rupees, which is included in the overall amount. So this 1,000 rupees is inadmissible because it is related to personal case. So we'll write here legal expenses, personal case, 1,000 rupees inadmissible. So point number 4, legal expenses in the brackets, personal case. So on personal case, he spent 1,000 rupees. So this 1,000 rupees is inadmissible. We are not uh, we are not okay with this 1,000 because it's inadmissible, but we are fine with the remaining 21,000 because that is related to business. Next, bad debts. Bad debts is a business loss. Customer who has failed to pay, the customer from whom the business is unable to recover the dues is a loss for the business. So therefore, it's a business loss, very much related to business. So need not do any kind of uh, adjustment or need not account for this transaction because it is already accounted in the profit and loss account, right? Drawings by proprietor, it's a personal expense. So let's write drawings by proprietor, entire amount 24,000, personal expense. Drawings, entire 24,000, personal expense. Next, you have GST. Now, what are the rules pertaining to taxes? I explained to you on the other day that all direct taxes are inadmissible and all indirect taxes are allowed. So indirect taxes are allowed, but there's a condition that it has to be paid on or before due date. So what is GST? GST is an indirect tax. Is it being paid on or before the due date? The answer is it was due on 31st July 2019 and it was paid also on the due date. So in simple words, it is paid on the due date. So I need not do anything. Next, interest on capital. Now interest on capital is a inadmissible item because as I told you while explaining the provisions, assessee cannot claim interest on his own capital. In case if assessee has borrowed money to do business, he has borrowed money for capital, right? Then borrowed money is allowed. If you pay interest on borrowed money is allowed. But if you charge interest for your own money, it does not make any sense because ultimately the entire profit belongs to the assessee. So why is he charging interest? The answer is with an objective of reducing the profit and reducing the tax. So therefore, interest on capital is inadmissible. So let's write down here interest on capital inadmissible. The amount is 7,000 rupees. Next, item number 7. Interest on capital is done. Repairs. So repairs, again, it's a part of any business organization for maintenance, right? To ensure that the premises are well maintained to avoid huge expenditure in the future. If you do periodic maintenance, property will be right in proper condition. You don't have to spend a lot of money in the future. So repairs are routine business expenses. Any business organization spends money on repairs and maintenance. But again, look at the adjustment. Uh, it says half of the repair expenses were on let out building. See here, he has house property, right? On this house property, he has spent half of the repair expense. So remaining half he has spent on business property, but the other half he has spent on personal property, which is nothing but his house property. So therefore, this half of the expense which is spent on let out building, which he has given it on rent, right? That is inadmissible, right? So repair expenses, half is inadmissible, the remaining half is allowed. So that's the reason I said always look at the adjustment also while solving the problem. So repairs, so half related to house property. So half into 2,500. So 1,250 is inadmissible. So rent, assessee has paid rent. Rent for what? What rent is this? The answer is maybe shop rent in which the assessee is doing a business, or maybe go down rent in which he's kept all the stocks. So therefore rent is a business expense. Let's also quickly look at if there is any adjustment. So we are done with this 3 adjustments. Okay, in fact, we have missed out on one of the adjustments. It says rupees 3,000 was spent on purchase of land, and this is included in legal expenses. Whereas legal expenses, we accounted only one item, but legal expenses has two, right? So let's do this again. Let's do a small collection. So legal expense 1,000, personal case, right? So that's the reason we have not allowed. And 3,000 for purchase of land. Now you don't get land for 3,000, but if you want to buy a land, of course you have to frame a agreement contract, right? You have to pay the lawyer to see if the documents are correct and if there are no flaws in the document, for which you're giving the lawyer consultation fees, right? So is this business related expense or this is a personal expense? The answer is, see, if I bought a land, right, I've appointed a lawyer to see my documents, for which I'm paying him some legal fees to draft agreement and to examine the documents. And probably I may have purchased this land for business. So in this case, is 3,000 allowed? Or possibility number two, this land I have purchased for personal use. In this case, is it allowed? What do you think? Is this allowed or is this inadmissible? Personal expenses 3,000 spent in relation to purchase of land. So is this a business related expense or is this a personal expense? So as I mentioned, land can be purchased for business also, it can be purchased for private personal use also. So nothing is mentioned as far as the question is concerned. The adjustment only says land was purchased. If you look at adjustment number one, rupees 3,000 was spent on purchase of land, and this is included in legal expense. The answer to this question is whether the land was purchased for business or for personal use does not matter. This is a capital expenditure. Now you might be wondering, sir, how can just 3,000 rupees be capital expenditure? The answer is simple. What is the definition of capital expenditure? Any capital expenditure includes the cost of the asset plus all expenses incurred in acquiring the asset. So that's the definition of capital expenditure. Capital expenditure includes what? Cost of the asset plus all the expenses incurred in acquiring the assets. Assume I'm a businessman, I need a machinery for my factory in Bangalore. So I've sent my manager to Germany to buy the machine. Now I've sent my manager, and for his stay, for his travel, let's say on my manager, I've spent 30,000, not just 30,000, let's say 50,000 rupees I've spent. And the cost of the machine is 10 lakhs. Now, in order to get that machinery from Germany to Bangalore, I've spent another 5 lakhs. Now, in order to install that machinery in my factory, I've spent 1 lakh. Now, for insurance, I've spent another 2 lakhs. If I ask you which is capital expenditure in this, the answer is apply this formula. What is capital expenditure? Cost of the asset plus all the expenses incurred in acquiring the asset. So while recording the value of this machine in the balance sheet, what I'll do, I'll add everything. 10, 15, 16, 18, 18 lakh 50,000. So I will show this in the balance sheet. Cost of asset as 18 lakh 15,000. So same thing happens here. What has happened is assessee has bought a land. We don't know whether it is for business or personal. But in order to buy this land, he has appointed a lawyer, and a lawyer has gone through the documents. He has helped the assessee in preparing the purchase or the sales deed, for which the assessee has paid him 3,000 as legal expense. This legal expense is included here in this 22,000. So should we allow this 3,000 or we shouldn't allow this 3,000? The answer is simple. This 3,000 is a capital expenditure. What is capital expenditure? Cost of the asset plus all the expenses incurred in acquiring the assets. So value of the land, cost of the land plus all the expenses incurred in buying that land. So therefore this 3,000 is inadmissible. So why this 3,000 is inadmissible? Because it's a capital expenditure. So legal expense, item number 4, not just includes personal expense, but it also includes expense on purchase of land. And how much is that? That's 4,000. Sorry, 3,000. So 3,000 plus 1,000 will give you 4,000. So this will be 4,000. Okay, so that's the item what we had missed out on, right? So let us put the tick mark so that we don't forget on any transaction or repeat the same transaction twice. Okay, so let's quickly go back to the profit and loss account. So I was talking about rent, and I told you the rent is the shop rent or the go down rent what the assessee has paid. So this is allowed, and there is no adjustment pertaining to rent at all, right? Now again, one more time, legal expense has come. Legal expense has come twice. Once here 22,000 and one more 5,000 here. So probably I would have repeated while typing. So let me just quickly change it, and you people can also make a note in your notes. We will write it as some other expense, right? So let's write this as sales promotion. Sales promotion expense. Next, depreciation 15,000. Now this is where you guys have to pay attention, because depreciation, as I mentioned, is a common adjustment in most of the questions. So depreciation is allowed. Depreciation is a business expense, but is it as per IT? Because it is allowed only if it is as per IT Act, and IT Act provides rules for depreciation under section 32. So you should always see whether it is as per IT or not. But here in the profit and loss account, only the depreciation amount is given. We don't have a mention whether it is as per income tax rules or not. So we quickly look at the adjustment. Adjustment number 3 says depreciation as per IT Act on all assets, including motor car, which was purchased during the previous year, amounts to 14,400. If this is as per IT Act, then what is this? That means this is not as per IT Act, so therefore it becomes inadmissible expense. So this is the first kind of situation what you will get to see, wherein you'll have depreciation in two places, one in the P&L account and one in the adjustment. So what you have to do is examine both and see whichever is as per IT, right? And which is not as per IT, consider that as inadmissible expense. Situation number 2, depreciation is given in profit and loss account, but nothing is mentioned. Nothing is mentioned in the adjustment. In such a scenario, what will you do? The one which is given in the profit and loss account itself will be considered as per IT Act. So that's what you guys have to remember. So since depreciation as per IT Act is 14,400, which means this here, the amount given in P&L account is not as per IT Act. So therefore it becomes inadmissible. Let's quickly write it. Depreciation in the bracket, not as per IT Act. The amount is 15,000. So let's write down 15,000. Okay. Next. So we are done with this also. Bonus to staff allowed. You're paying for the benefit of the employees, but bonus to proprietor inadmissible. Proprietor takes the entire profit. So why proprietor wants the bonus? So therefore, bonus paid to proprietor becomes inadmissible expense. So let's write this here. Bonus paid to proprietor 4,000 inadmissible. Bonus to proprietor 4,000 inadmissible. Next, car purchased. Now, car purchased, as you guys know, car is a capital expenditure. It should go to balance sheet. It is an asset. Assets are not recorded in P&L account. Assets are recorded in the balance sheet. So therefore, it becomes inadmissible expense. Now, you might be asking me questions of whether this car is purchased for assessee's personal use or what it is. Let's see the adjustment. Is there anywhere mentioned that car is used for 50-50, car is used for 40-60? Nothing is mentioned. Nowhere it says that car is being used for personal use. Right? In the absence of information, we assume that this car is purchased for the business purpose, to transport the employees, to deliver goods to the customers. He has bought this car. Therefore, this will be admissible. But the reason why we are not taking, we are saying it should not come here is because you don't record assets in P&L account. Assets are recorded in the balance sheet. So since it is recorded here, it is reducing the profit unnecessarily. So therefore, let's add it back. Car purchased, capital expenditure, we are not going to record in P&L account. So let's record it here. Capital expenditure, car purchased 72,000. Car purchased is a capital expenditure, but what about the routine maintenance of the car? Car is being repaired, it is given for service periodically. That is permitted. Car expenses are permitted. Repair, petrol, all that are permitted, provided it should be used for business. Now, how did we come to conclusion whether it is used for business or not? We saw the adjustments. Nowhere it is mentioned that it is used for personal use. So we assume that this is used for business, and therefore we are allowing car expenses. Sometimes what happens, you will be given the adjustment which says that car is used for 50-50, 50 for business, 50 for personal. In that case, what you will do, you will take only half the expense, or the proportion to which the car is not used for business will become inadmissible. Now, in the absence of information, we assume the entire car is used for business, and therefore car expenses, which are revenue expenditure, is allowed. So we don't have to do anything. Now, next is donations. You know, donations are not related to business, and therefore it is inadmissible. So donations, inadmissible expense. So donation amount is 2,000 rupees. Next to donation, you have provision. And I told you, income tax does not allow reserves and provisions, because reserves and provisions will reduce your profit unnecessarily. So therefore, provision for bad debts is also an inadmissible expense. 6,000 rupees. Provision for bad debts. 6,000 rupees. Okay, so let's quickly look at the format. We are done with item number A. Now we have to go to item number B, which is admissible incomes. Allowed, but the assessee has forgotten to record it. Allowed but not recorded. Here it is. Admissible incomes. Allowed but not recorded. So when we say admissible expense, allowed but not recorded, where should we locate this? Because it says allowed but not recorded. Where it is not recorded? In the profit and loss account. So we should look at the adjustments. Admissible incomes, allowed but not credited to P&L account. So look at the P&L account. You will not find this, because It is not recorded in P&L account. So therefore, you have to look into the adjustments. Now, as far as the adjustments are concerned, all the first 6 adjustments we have accounted for, and all the first 6 adjustments are related to expenses. What we have done, all the first 6 adjustments are related to expenses. Only the last one, the 7th adjustment, is related to income. Interest from debtors received, not recorded in the books, 5,000. So let's record this now. First of all, is interest received from debtors a business income or it is not business income? What is your opinion? I told you the definition of business income. Business income is an income which is in the form of sales or activities related to sales. Activities related to sale. So I have given goods to my customer, and in the bill it is clearly mentioned in the invoice, credit invoice, that if you do not repay the amount as per the due date, I will charge you interest. So from whom am I collecting the interest? I'm collecting interest from my customer. Customer is again part of business. Sales, right? We have sold goods to customer. So when we receive interest from customer for delaying payment, this is an activity which is related to sale. And therefore, this is a business income. Because you will also find in the P&L account interest on government securities, interest on bonds, interest on savings bank account, in all that. But that is not related to sales. That is investment. You have invested money in securities, you're earning interest. That is non-business income. But this interest is received from debtors for to whom we have sold the goods on credit and they have not paid on time. So we are charging them interest. So interest from debtors is a very much business income, right? So this is an activity related to sales. Interest from debtors. So we have received 7,000 interest from, is it 7,000? 5,000. Okay. So we have received 5,000 interest from debtors. So we'll record here 5,000. Next. Item number C and D, both we do not have in this question. And what are item number C and D? Overvaluation of opening stock, undervaluation of closing stock. Both we do not have in this question because this question does not have a trading account. This is only a P&L account. So we do not have any data pertaining to stock, but still you write this so that you remember the steps, right? So let's do the total now. Total of step 1 plus 2. So let's record the total. We'll do that a little later. So now let's move on to step number 3. What is step number 3? Less transactions that reduces net profit. So less transactions that increases net profit. Right. So let's not hurry up. Let's stop it here because we're also running out of time. So let's stop it here. We'll do the remaining half of the problem little later. It would have been better if we would have completed this, but I don't know because the time is getting over. So let's see. So I'll just quickly unmute you guys and please let me know if you have any questions what we have done so far. Last 2 minutes we'll spend on taking questions, and then we will continue with the same problem in the next class. So if you have any doubts on the part of the problem which we have done now, you can go ahead and come on mic and ask your questions or put your questions in the chat box. Okay, I think now you can unmute yourself and ask questions. 76 from A section, go ahead.
So the depreciation not amounting to, for not as per IT Act,
Yeah.
since it's the 14,400 which the adjustment is given, it's
Yes.
that as per IT Act. So only the difference we should keep in the profit loss, right?
You can do that, and there are two ways of treating it. First is what is not as per IT Act recorded under the heading inadmissible expenses. First record what is not as per IT Act under inadmissible expense, and then what is as per IT Act record under admissible expense. So what will happen, that amount will set off and the difference will still remain the same. Or alternatively, find out the difference between both the amounts, then record the amount. Both will give you the same answer, whether you follow the first one, what you mentioned, identify the difference amount and then record only the difference amount. If you do that, also correct. Alternatively, write both, what is as per IT and what is not as per IT. Still you get the same answer. So you can follow either one of these steps, which I'll tell you others in case if others are not able to get what your friend is asking, roll number 76. We will discuss that problem. Anyways, we have to complete it. At that time, I'll tell you what is the point that your friend had asked. So 76, either you can find out the difference amount and then account only the difference amount, or record both, what is inadmissible and what is admissible.
Okay,
Anybody
sir.
else who has questions?
Sir, could you explain again the salary paid to work at home?
Okay, so salaries is the amount what you pay for the employees for the services what they have rendered to business. So that's their reward for their contribution to business. So if I have an employee, let's say I have a shop, I have 3 employees in my shop, I'm paying them salary. But I also have one more employee, which I've appointed him at home to do household work, right? Probably cleaning the house, washing the utensils, washing the clothes, going and buying the groceries. So he's actually not doing business related work at all. He's doing household work. He's helping my spouse. So therefore, the salary what I pay him, it's actually nothing to do with business. And hence what we have done in this question, salaries includes an amount here, as you can see, which is being paid as a salary to a worker at home. So only that amount is inadmissible. The remaining, the 89,000 is fine. But since 6,000 was paid to a employee at home who's doing household work, that is inadmissible. The remaining part is yes, we are fine with that. So anything you pay for a domestic servant, inadmissible. Okay, are you clear? 61.
Yes, sir. Thank you, sir.
Okay, now there's one more question from row number 75. He says, sir, could you explain capital expenditure adjustment? Yes. So that's very interesting because capital expenditure is something which you guys should remember. So let me write it down here. So what is, first of all, what is a capital expenditure? Capital expenditure is defined as cost of asset plus all expenses incurred in acquiring the asset. So where do we record capital expenditure? Capital expenditure should be recorded in balance sheet. So in this question, what we just went through, it has two transactions related to capital expenditure. One is expenses in connection with land purchase expense. Second is motor car. And we have treated both as capital expenditure. Now, motor car is relatively easy to understand because it's an asset, right? And an assessee can have motor car being used for both business as well as for personal use. So that doesn't matter. As far as he has purchased a motor car, it should go to balance sheet. It becomes inadmissible. But later, if there is any motor car expense, depreciation on motor car, then we have to see whether how much she's using for personal, how much is using for business. That comes later. But anyways, the moment you see motor car is being purchased and recorded in P&L account, it is a capital expenditure and therefore it becomes inadmissible. Now, similarly, there's one more transaction which says that the assessee has spent 3,000 for buying the land, and this 3,000 is recorded in where? Legal expense. So when you buy a land, of course, you have to make papers, documents for which I'm paying lawyer. I'm asking him to go through the sale deed also. So he's giving me some service. I'm giving him legal expense, legal fees, which is considered as legal expense. So why is this not allowed as a revenue expenditure? Because of this. So let's say I've spent 1 crore on land and plus I've given 30,000 rupees to my lawyer. Why I've given 30,000 rupees to my lawyer? Because lawyer has gone through the documents and he has helped me preparing the contract also. Plus I've given 3 lakh rupees to the broker who helped me in buying the land. So what is the capital expenditure? The capital expenditure is 1 crore 3 lakh 30,000. So this 1 crore 3 lakh 30,000 is considered as capital expenditure and this will go to balance sheet. Simple. So this amount what I've spent on lawyer is considered as legal expense. So this is also a capital expenditure because capital expenditure does not only includes cost of the asset, it also includes all the expenses incurred in acquiring the asset. So this also should be added to the value of the asset. So that's the reason we have considered expenses spent on purchase of land also as a capital expenditure, and we have allowed it as inadmissible expense. Okay, so yes, you guys can leave. Even I have a class, so you can leave. We'll continue the same session in the next class. Okay, so I'll meet you in the next class. Take care. Have a good day. Bye.